Hello, and welcome to this training video on multiple time frame analysis, or MTFA, using candlestick charts. In this video, we will be discussing the importance of using multiple time frames when analyzing the market and how you can use candlestick charts to help you make informed trading decisions. In this video, we will discuss: what is multiple time frame analysis? Why candlestick charts are important? How to use candlestick charts for MTFA. And finally, some examples of MTFA using candlestick charts. Multiple time frame analysis, or MTFA for short, is a method of analyzing the market that involves looking at different time frames to gain a better understanding of the overall trend. By examining price action on various time frames, you can get a better sense of the market's direction and momentum. The concept of MTFA is based on the idea that the trend is your friend, and by identifying the trend on different time frames, you can improve your trading decisions. Why candlestick charts are important? We have already learned that candlestick charts are a popular type of chart used by traders because they provide a visual representation of price action over a specified period. Each candle on the chart represents a specific time frame, such as 1 hour or 1 day. Candlestick charts provide valuable information about the market's direction and momentum, as we pointed out in previous videos. They can help you identify support and resistance levels and chart patterns. Additionally, candlestick charts can help you spot potential trading opportunities based on price action. Since we know about that already, and if you don't, please watch the previous videos. Now it is time to apply that knowledge to multiple time frames. How to use candlestick charts for MTFA. To use candlestick charts for MTFA, you should start by selecting the time frames you want to analyze. This could include short-term time frames such as 15-minute or 30-minute charts, as well as longer-term time frames such as daily or weekly charts. Once you have selected your time frames, you can start analyzing the charts using candlestick patterns. For example, you might use a long-term chart to identify the overall trend, and then use a shorter-term chart to identify entry and exit points. One popular way to use candlestick charts for MTFA is to look for confluence between different time frames. For example, if the long-term chart shows an uptrend and the short-term chart shows a bullish reversal pattern, this could be a signal to enter a long trade. Let's take a look at some examples of using MTFA with candlestick charts. For the first example, we will use a daily and a 4-hour Bitcoin US dollar chart. You can see the time frame and asset name here in the corner. In this example, we'll use a daily chart to identify the overall trend, and a 4-hour chart to identify entry and exit points. We can see on the daily chart that the overall trend in this part is bearish. Here a hammer is formed. This signals the end of a bearish trend. Here this green line shows support. It means the price might not go under this line. After hammer, the next day, which is this green candle, we use a 4-hour chart to identify our entry and exit points. And on the 4-hour chart, we can see a bullish reversal pattern has formed, which is the 3 advancing white soldiers. So, we have 2 signals here: hammer as the end of the bearish trend on the daily chart and 3 advancing white soldiers as a signal of uptrend on the 4-hour chart. This could be a signal to enter a long trade. We can place a long trade after the 3 advancing white soldiers. We can place a stop-loss position below the green support line and take profit depending on our risk tolerance. We can also use a weekly chart and a daily chart. The method is the same. We'll use a weekly chart to identify the overall trend and a daily chart to identify entry and exit points. In this example, we put the assumption of trend is your friend to the test and look for confluence in the time frame. We can see on the weekly chart that the overall trend is bullish. We can see several bullish signals on the weekly chart. This is the bullish piercing pattern. We have a hammer here, another bullish piercing pattern here, and Morningstar doji here. To place a trade, we analyze this candle on the daily chart. As you can see, this doji that ends on 3rd of April still shows indecision for the week, so we do daily chart analysis for entry point on next week's candle. In this daily chart, we can see that a bullish reversal pattern has formed. This is a bullish piercing pattern that could be a signal to enter a long trade. You can place a trade after this bullish piercing pattern on the daily chart and identify take profit and stop loss positions according to your own risk tolerance. What you should take away from this is that we use higher time frames to analyze the trend and lower time frames to specify the entry and exit points. In conclusion, multiple time frame analysis is an important tool for traders. By analyzing price action on different time frames using candlestick charts, you can gain a better understanding of the market's direction and momentum and make more informed trading decisions. When using candlestick charts for MTFA, it's important to select the right time frames and look for confluence between them. By doing so, you can increase the likelihood of identifying profitable trading opportunities. Remember, trading is always risky, and no strategy can guarantee success. It's important to do your own research, practice good risk management, and stay disciplined in your trading approach. Thank you for watching this training video on multiple time frame analysis using candlestick charts. We hope you found this information helpful in your trading journey.